Good morning and welcome, Patriot Radio News Hour. Happy Friday, guys. Hope it finds you well out there. Gonna be a really nice, what, we got May? It's May! May Day. That's maybe what the markets start doing. But relative calm in the markets today. I guess we'll take it. It was a big week. We had really high inflation data. Of course, we knew that was coming. We had jobless claims that were really low, which has been the pattern, but even lower than normal. We had GDP first quarter come in less than everybody was hoping for. But then again, first and fourth quarter GDP is always lower, and third and fourth are higher, but not the grow your way out of it stuff that we were hoping for. Lots of issues in the debt markets. We had the UK trying to intervene in its bond market. The Japanese, they're just firing everything they have to try to keep the yen somewhat under control. We had a weird Fed vote, right? So Jay Powell's last Fed meeting, 8-4, which is unheard of. And 3 of them were just dissenting, not because they wanted to raise rates or lower rates, because they're upset that the bias is, and I keep telling you, right, they're going to cut rates this year. See, they didn't like that. They didn't like that the bias is that they're going to cut rates, not because they want to. Listen, I get it. I do. I get it. I get that they're upset that they're in the corner with no good options, right? They don't want everybody to know. There is no choice here, really. There isn't. Obviously, if there was any real choice in this matter, they would have raised rates yesterday. And you could definitely argue that it would have to have been like 50 points. A big rise in rates. Why didn't they? That's the question all of you really should be asking. Right? Why isn't the Federal Reserve looking out for me? See, and I keep telling you, these guys, they're not our friends. The banks are not our friends. You know how much inflation is. Just imagine if you're a saver. Just imagine. Yeah, hey, I save. I've got a savings account at the bank with money in it. Awesome. Why aren't they paying me for leaving money at the bank the way they should be? With inflation running this hot, I should be getting like 5%. How about you guys that have flooded the money markets? You should be saying the same thing. It's a losing proposition. See, they don't want your money to have value. People don't understand that. It's frustrating, the people that leave lots of money in their bank accounts. It's dumb. The Fed knows it too. Why do you think they lower rates and do all this nonsense? And why do you think they prevent price discovery on the bond market right now? Why is the Fed creating money out of thin air to buy bonds? Why? Have you asked yourself why? Why are they? What's the reason? Well, they want to try to pretend that the yields aren't as high as they're supposed to be. We all know 4.4. That's not enough. Bond yields right now, honestly, right, they should be 7-8%. Because that's really what inflation is. Right? We know what it is. Every time they do quantitative easing, month after month after month, they're giving you the finger. Really giving all of us the finger. Why? Because they don't want to pay you for not spending your money. That's all they care about. They need GDP to grow. And I mean 2% is not even close. It's not. Normally, right? Okay, 2% not great, but it's not terrible. I mean, it's okay. They are going to punish anybody that tries to save. Now, you can risk it, right? You can risk it. Put it in the stock market, right? They like that. Right? You can risk it and buy housing or land or what have you, right? They like that. But leaving it in the bank, nope. You have to be reckless with your money. That's why gold and silver are so great. For those of you that are risk averse, it's a great place to be. Take the radio news hour. I'll be back right after the break. 800-951-0592. allamericangold.com is the website. Remember, all weekend long, you can always head out to allamericangold.com and get your orders in. Who knows what the weekend news is going to bring, but at least for a day. And then, the day's not over. So I'm open for the day. Relative calm in the markets. There was a report. Iran gave another proposal. Sounds great. Okay, yeah, right. Did it involve them giving up nuclear weapons? No. So, but I guess, if you want to be the half full, the bright side of it is, at least they sent a proposal. Right, so I guess you could say that was a positive step. We'll see if anything comes of it. It doesn't look like it will, but like we said, at least they sent something. Even though it looks like it's already been rejected, but neither here nor there. The Dow's up 100. The S&P's up 40. The Nasdaq's up 240. The 10-year note down to 438. The British 10-year yield 497. So I guess they've got it below. Crude oil 102 on the NYMEX, 109 on Brent. Unleaded gas down 3 cents. Gold is higher right now. Gold's up another $16, 46.39 right now on gold. Again, $20 gold pieces. This is where it's at, guys. 47.25, 10 or more, 4,700. And silver up $2, approaching $76 to the ounce. And we're sitting here watching and waiting, and it's starting to really take shape here. It really is. They're in trouble. So much trouble that 3 Fed governors who did not want to raise rates. Here's what's funny. They weren't saying, hey, we should raise rates. No, that's not why they dissented. Right? There was 4 dissenters. One wanted to lower rates. But 4 dissenters. 3 of them just dissented because they don't like the tone, if you will, the guidance that they're going to cut rates. Given the recent economic and geopolitical developments and the higher level of uncertainty about the outlook, we don't believe such forward guidance is appropriate at this time. What a bunch of nonsense. and this is what I'm saying. Here's a word salad that gives the illusion that they care about the money we make every day. They do not. Right? Vote to raise rates. Dissent saying we should have raised rates. They didn't do that. They're just like, well, we don't like it that you already know we're going to cut rates. That's why we're going to dissent. They're not doing it because they can't. Well, and that's not true, right? They could. Could stocks be at an all-time high? Nope. Could the billionaires be so incredibly wealthy? Could we have this huge bubble that now every metrics has taken out the dot-com bubble, the financial crisis? We've blown it all away. And you know what's so funny? We still haven't learned, have we? No. We just want to believe. We need to believe. And then the second the bubble bursts, right, then all of a sudden you'll decide that you need to get more wealth insurance. See, then you've got to buy the insurance before the accident. You know this. I know you know this. Wait till you see what the inflation numbers are next month, and the month after, and the month after that. They're not going to do anything about it. No, remember, it's structural tightness. We can't help it. Well, as soon as the war's over. Well, I guess the war's over too, by the way. I don't know if you noticed that. Can't call it a war anymore. So apparently the Trump administration, well, since we haven't fired any missiles, we don't have to, because apparently the president, after 60 days, has to go to Congress to get approval. He can start a war. He just can't continue the war. But now, I guess, we'll count that as the war being over. So we're not at war anymore. We're just, whatever it is we're doing. What is it going to take for you to get serious about what you already know is coming? I know you know. You know it. I know it. Warren Buffett knows it. Jamie Dimon knows it. Ray Dalio knows it. Jeff Gundlach knows it. Brian Moynihan at Bank of America, he knows it. Jay Powell knows it. Kevin Warsh knows it. The Japanese Central Bank knows it. The Indian Central Bank knows it. The Chinese Central Bank knows it. Well, here you go, guys. Apparently, I don't know, unless we do something here, the last-minute bailout of Spirit Airlines looks like it may not happen. If you guys are on Spirit, you may want to find somewhere else to fly. Apparently, Spirit Airlines is going to shutter operations unless there's a last-second save here. So be prepared for that. But back to what we were talking about. Yesterday, we talked about the bond markets. And I talk about them a lot. Wall Street crashing is one thing. It sucks, right? Housing crash, that really sucks, right? Because it's still got 60% of the people own a house. The bond market, though, that's the real debt market. Yesterday, you may have seen headlines. We've crested 100% of GDP. It's so funny, right? GDP's 30 trillion. The debt's 40 trillion. Okay, we passed 100% of GDP a long time ago. But that is what's held outside of central banks, right? Outside of it. You know, what we'll call privately held. All of you guys that love your money market funds, they own a lot. Insurance companies own a lot. Obviously, companies themselves, and really like the Mag 7, right? They own a lot of treasuries. Very short term. Very short term. But nobody, and I shouldn't say nobody, people go. The auctions every day, tens and tens and tens and tens of billions of dollars, hundreds of billions of dollars a week, forced to roll over the vast majority of it 6 months or less. It's like this ever-continuing avalanche. And they're sitting there telling you, oh, well, you know, we want 2% inflation. And remember when this came out? That was after the financial crisis. And I said then, they just made it up. 2%. It was made up. That was never a thing. Right? Their thing was supposed to be stable pricing. And then, of course, they threw in full employment. Yeah, somehow lowering the interest rates creates jobs. Right? Because how's the theory go? Well, we lower the interest rate. People buy homes. People buy cars. People buy this. People buy that. Did you notice how it hasn't worked this time? I mean, the Fed's funds rate's, 3.5? Well, I guess the 3.75, right? They do this range now. But we are up, closing in on 5? Didn't work. Why didn't it work? Why is it not working now? Why is it that all of a sudden we've got to have Fed governors say, well, I don't want to raise rates. I just don't like that you're saying we may lower them. Yeah. Wow, that's big. Listen, we got some April data. This is kind of the first April data that we've seen. And it had to do with the ISM manufacturing PMI that came in today. New orders came in a little light, but not horrible. Prices paid, a terrible miss. They already, now this is a number where 50 is break even, 100 is insanity, okay? They were expecting prices paid to be 80, which already, that's a ridiculous number. It came in at 85. On top of that, the employment number was supposed to be 49. It came in at 46, so that was bad. This is classic stagflation. Classic stagflation. And you're sitting here telling me a number like 85, which, I mean, March's reading was bad because it was 78. That's over. We had like a 6%, over 6, almost 7%. jump in prices paid. The last 3 months, up 26%. That's a whole lot higher than 800-951-0592. Gold's up 22.46, almost 46.45. Tell you what, it's Friday. I know that you guys just don't want to believe. And I get it because you get, well, gosh, but Wall Street's 49,000. It's not that bad, right? People are out. I mean, it's not great, but it's not terrible. We're talking about the economy. Tell you what I'll do. Everybody, I don't care if you buy 1, 10, 100, all $20 gold pieces, $46.95. So it'll be like $50 over. Great opportunity. 800-951-0592. Keep adding. By the way, here, let me give you an example. Bank of America, 12-month gold target. Ready? Just came out. Ready? $6,000. I'll be shocked if it's not more than that. Silver, now this is where I think they're really busy. They say, well, it's going to average 86. It's an interesting way to kind of tell, because they don't want to tell you the truth. Listen, silver's going to be way over $100. And very quietly, it's okay, very quietly, inventories get worse and worse and worse. Kind of like oil right now. Kind of a similar thing that we're seeing. We've seen oil spike because people know how to do math. God, we got the shortage is coming. And then we see it fall. I mean, gosh, we've seen oil fall like $16 in a day. Crazy. They've turned, and you know what? That's another thing, too. They've turned everything into a meme stock, haven't they? It's another, how do you know the bubble's getting ready to break? Stuff like that. But every week that goes by, the shortage gets worse. But the markets, they know, okay, well, there's a date, right, where, now we got a big problem, right? We've seen, like, silver. Why did silver go from 30 to 90, right? And really 30 to 100. There was a date. See, think about this. Put it in this terms. This year's the 6th straight year of shortages in silver. Now, granted, when the silver shortage started, right, silver was like $15. Almost 4 years of shortages only made it go to 30. But that 5th year, that shortage got bad. Started running out. And the price explodes. Now, we're in the next phase. We've got another year of shortages. And they're like, okay, well, gosh, I hope we can hold the line. Looks like silver's done, like 70's kind of the bottom, kind of, right? We're kind of getting that bottom in now. And then it's going to explode again. The difference is it's not going to take 4 years. Not going to take 4 more years of shortages. Crude oil. We've got every month gets a little worse. If this is to believe, I don't know. J.P. Morgan says the war has to end by August. Otherwise, right, we're all screwed. Why? Well, at that point, there is no oil, and pretty much the world starts shutting down. So, could oil be $200, right? Sure, could be. Should it be? Probably, right? I mean, that doesn't give us much time, right? They're like, yeah, you got 90 days. And every 2 to 3 weeks closer we get. Well, all right. We gave a warning this week, got to 126. Okay, well, we'll give you another week. What's the next warning going to be? I don't know, 140? 150, 160? Yesterday, one of the biggest interventions ever happened. Did anyone know? I mean, I told you. Nope. Shh. It's okay. The Bank of Japan, in what they are calling possibly the final evacuation warning, intervened in the markets, triggering the biggest one-day dollar move against the yen going back to COVID. And people are saying that Japan is essentially out of bullets. I don't know. I think they've been out of bullets for a long time. But their inability to stabilize their currency, by the way, they did it in seconds. It took seconds, right? That's how big and how much money they had to throw at things. The yen is going to fall. Yeah. The question is, are you going to let it take you with it? $20 gold pieces, $46.95 for everybody, no matter how many you buy at 800-951-0592. I'll be back after the break. 800-951-0592. Don't worry, it's fine. One of the largest interventions ever. We're seeing it happen all over the globe, and it's only getting worse. And obviously the oil thing makes everything worse, right? Because already governments don't have money, and you got to have oil, right? And you got now, right? Everyone's got to build more bombs, right? More guns, more ammo, more this, more that. Even today, take today. The UAE left OPEC today. Today's the official day. Do you know that they put out an alert urging all of its citizens in Iran, Lebanon, and Iraq to leave immediately? It's not on the news. It's interesting. Do they know something we don't? All of its citizens in Iran, Lebanon, and Iraq. Now, you would think they would have done that already. But, as we talked, is there going to be an attack on Iran? And that, here's what's funny. If there is, then oil's taking the next jump, right? That next jump because of supply issues. And then who's the next country that's got to figure out a way to intervene in their markets, right? Not allowing for price discovery. See, and this is what I like Wall Street. I do. What I don't like is they've decided that we don't want Wall Street to work the way it's supposed to. Right? We don't want true price discovery. They don't. The central banks don't want true price discovery. Why did Japan have one of the largest interventions in its currency ever? Well, we don't want the real price of it to be out there. Why? Well, the whole system will collapse. Do you know that this is what we're living on now? Congratulations. I mean, we only have ourselves to blame. We've let it happen. We need to get rid of the central bank. I know it's people, oh my gosh, we can never live without a central bank. We did it for over 100 years, became a superpower without it. Inflation didn't exist. Well, it only existed during war. And then as soon as the war ended, kind of like Donald Trump, well, as soon as the war's over, I can't call it a war. As soon as whatever we're doing in Iran, the gas prices will go back down. They will. I agree. I mean, I don't know where they're going to finish, right? But let's just be conservative. I'm going to be kind and say, okay, well, let's just say gas prices, go to $5, $6 here, $7 in California. They'll go back down. But are they going to go back to where they were before? No. We'll probably be happy at $3.99 here. Maybe, I don't know, $3 in Colorado. I don't know. But they're not going to go back to 2 and change. It's gone. Didn't used to be that way. Ever. And now all as we do is manipulate data. All the data has to be, we got to adjust it. We got to massage it. Now we're going to have a new head of the Fed who's already testified right in front of Congress with our great elected officials and said, oh, well, you know what? We're going to change inflation. Oh, okay. Well, tell us. Tell us, Kevin. What are you going to do? Oh, well, stuff gets expensive for whatever reason. Take beef. Well, it's not our fault that everything got so expensive that cattle ranchers, right, couldn't pay. Think about this. Couldn't pay to take care of their cattle, so now they just send them to slaughter. And now there's no cattle. And now the best part is they don't even have to pay for it anymore. Close enough. Here you go. Buy it. Someone else can feed it. And well, we're just not going to count it. Yeah, because we're going to focus in on underlying inflation. What? What do you mean underlying? Like gas. Yeah, we just won't count it. Yeah, I know it's but it's it's the war's fault. Like stuff doesn't happen, so we don't want to count it. Well, what does that allow you to do? Well, now we can say that inflation can be 3.5%, but it's really not. What? Yeah. This is what you want to believe. I think, I don't know, less than a year. Well, you know what? We got maybe 18 months. So anywhere from 90 days to 18 months. And there will be a bond market crisis. I hope you've gotten yourself prepared. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. Wrapping up this Friday. The market's really going as expected. As I told you guys, this was a setup here with Jay Powell's final meeting. They They tried to hit gold, and they did a little bit, but as I told you, gold was going to rebound as soon as it was over, and that's exactly what we've seen. The good part is I'm starting to get real comfortable here. $4,500 gold kind of feels like gold. That's like, yeah, not really going any lower than that. Silver looks like $70. I mean, so, silver's $76, almost up 10% from the low. Gold, almost $46.50. $20 gold pieces, 1 through 100. Excuse me, I had a sneeze there. $46.95 today. Take advantage of all of this, but understand, as we're all, Iran this and oil prices that, there is huge issues in these debt markets. There is a incredible amount of money printing going on with less and less and less effect. Now, do you know that the government's got to spend, I think it's like $1.40 to get $1 of growth? That is a recipe. See, this is why grow your way out can't work. That doesn't work. You can't grow out. If it costs you more than it does to grow, if you've got to spend it, of course, here's the problem. That number keeps getting worse. Doesn't get better. Yeah, I don't know. There's not a good answer. By the way, Chevron, ConocoPhillips, Exxon, earnings have been coming out. Their CEOs, imminent critical shortages for oil are coming. This is what we have. We have the same problem in the silver markets, the copper markets, the gold markets. We have the same problem in the helium markets, the aluminum markets, the gasoline markets, the diesel markets, the jet fuel market. And we're kind of hoping that somehow, some way, we'll be able to push back from the brink. But according, again, J.P. Morgan today says we got about 90 days, and every day we get closer, there's going to be this issue where after that point, nothing good can happen. I don't know. I don't know how this works as more and more oil gets shut in. By the way, the things that they say are going to be the worst, in case you wanted to know: jet fuel, gasoline, and fertilizer. Good thing we don't need any of that stuff. 800-951-0592.